Good morning, my name's Ryan Littlestone from forexflow.live. Welcome to a new week. What we're seeing in FX markets at the moment is pretty much following the usual risk on, risk off pattern that we saw over the last few weeks, if you like. What we had last week, beginning of the week, was the end of month, end of quarter, and the end of the first half of the year. And obviously, what the first 6 months it's been. There was quite a bit of volatility there as players did their month-end rebalancing and FX markets moved around, but we've settled down now. And what we're really seeing is markets not really breaking any new ranges. We're seeing the levels in play that we've been watching for a while. They're pretty much holding. And it's become purely a matter of for FX traders to play these ranges, play these short-term ranges and looking at the wider edges. Now, one of the pairs I'm looking at today is dollar versus the Japanese yen. Now this has been very, very tight at the moment. We're pretty much entrenched between sort of 107 and 108, with the odd little extension above and below that. And as we can see from the daily chart, we're pretty much bouncing between the moving averages here. We've got the 100-day moving average in blue and the 55 DMA in brown on the chart. And for the last few days, we've been ping-ponging between those. So although it's been fairly quiet in this pair, it does give you the opportunity to trade and to scout the edges and to scout against the big figures. I had a short last week at 108 into 108 at 107.95. Unfortunately, I had to stop at 108.15 and I got high ticked, and the high of the day was 108.16. I got blown out of that, and we saw it come all the way back down again. So what I'm looking to trade, continue to trade, is to trade these edges. I'm looking down at the 107 area and up again at the 108 area. But I'm going to be mindful now of these little extensions. Down to 107, we've got a little bit of extension down to sort of 106, 75, 65, that area there. That becomes another edge of the range. And up above, we're again looking at 108, sort of 15-20 zone, before we look at a higher level up at sort of 108.40, which, as you can see on the chart there, is marked by the 200-day moving average, and also the 61.8 fib of the recent move lower. So, although we're not going very far, as I say, this pair does present opportunities to have a low-risk scalp trade against the edges, but you've got to have patience in between. Because what we're seeing in this pair particularly is we've got this middle ground around the 107.50, 40 and the 20-30 area, and every time we get into that zone we just tend to hover around there for quite a while, and then we either make a move lower or we make a move back higher. So it is a pair that needs a lot of patience to trade, but it is, if you like, a safe pair compared to something like cable, which is up and down as you like. It is a safe pair to trade, which then means you can keep your risk fairly tight and you can sit and let the trade run and push it as far as it goes, trail your stop behind it, so if you do get any reverses, then you're not hit and you're not taking any losses, you get into profit as soon as you can. So that's pretty much one of the pairs I'm watching today, and obviously if we do get any breakouts, then what I'm looking at is something above 108.40, and then that could progress up to 109, which again is another area to look for shorts. Down below, as I say, we need to get below this 106.60 area, 60.70 area, then we could see a further push lower. So that's the sort of top and bottoms you want to look for, perhaps a potential break trade above 108.40, below 106.60 for a push lower, and see where the range develops from there. But in the meantime, as I say, keep it simple and trade the edges and the charts as you see them. And as usual, I wish you luck this week.